Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time, it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hi guys, welcome to the Greedy Trader channel. Well, I'm not exactly greedy, as most of you old watchers of the channel will testify. I have the most conservative approach to trading. It's just a nice parody idea from the Gordon Gekko mantra. There are only two kinds of traders, the greedy ones and the fearful ones.
Greed, for lack of a better word, is good. Greed is right. Greed works.
Those of you who are new to the channel, this is where you can learn how to really trade like a professional. Every video I make is packed with real examples with before and after scenarios, so you can see that it is simply a question of sticking with the plan and not changing it because you're having an emotional meltdown. Hi guys, so welcome back. In this video I'm going to be talking to you, or rather I'm going to be sticking with the topic of volume. Now I know for some of you, on finding my channel and learning about volume just on YouTube, judging from the countless DMs I get consistently, a lot of you guys are doing pretty well with trading right now just from discovering volume. Not to mention the other stuff that I've got on the channel. Guys, this is just insane, right? You know, I appreciate all the love that I get on the channel, but in reality, you guys should know this. And if you don't know this, you need to stop trading right now.
Stop it. Get some help.
It's entirely up to you whether you decide to further engage with the channel, you decide to go do what you were doing before, you decide to DM me on my Discord server. By the way, I'll leave descriptions in the link below. It is up to you what you decide to do, but all I can tell you is that if you don't have a very good understanding of volume, which for me is the demand and supply picture, which is my second trifecta, then you gotta take a step back, right? Because for me, trading is a business and you have to look at it that way. I mean, it's inconceivable that you're gonna make a living from this, or you're going to engage with this wholeheartedly if you are approaching it from the point of view that you can just come willy-nilly and just make trades and you're gonna make money because I guess it's so accessible. What bull? The truth is, it's not gonna happen that way. And I think obviously I'm preaching to the choir in this case because a lot of you know that is true. And call it as you want. Trading is hard. It's hard because it requires a lot of discipline. Also, there's a lot of information that's hidden. The people who set up this system, which is born out of the fractional reserve banking system, which is born out of the economy's, the bank's ability to generate credit inside of the economy, and that's what fuels these markets. It's not going to be easy for the average man because the reality of it is that this whole thing was designed to take your money.
You better lawyer up, asshole, because I'm not coming back for 30%. I'm coming back for everything.
It's just the way it is. So yes, ultimately for some people it's just a vice. And if that's the case, then you're probably not gonna like this channel very much, to be honest, because usually I'm really serious about it. So it's not very vicey for me. So I'm sure for a lot of you who think it's vicey, you're gonna be like, come on, you know, can't you just do what some of those other talking heads do on YouTube, where they do all their flashy screen stuff and, you know, all their retention editing and, you know, stuff that makes YouTube cool, right? But that's not me. This channel was developed more as an educational framework channel and has remained that, and hence it's a small channel because obviously it makes sense. I'm competing with people who have, you know, very good you know, marketing and video editing skill sets that I don't possess. Frankly, I'm a trader, I'm not those things. So whilst I know my way around the internet, I'm not that old. And as a result, I know how to reach people on YouTube, I know how to talk to you guys, you know, and I know how to sort of get you guys in the frame of mind where you're going to treat this as a business and to succeed, but I'm not a great marketer, I'm afraid. So there you go. In any case, the video today is about volume, right? So I'm going to walk you guys through a few steps. I've got a lot of videos already on volume, but every day I see more and more why you guys should be focused on volume, right? And like every day from all the DMs I get, I see more and more. A lot of you don't know anything about volume, but some people have been trading for a long time, to be fair, and they still don't know about volume, and it really is a bit, you know, you start to feel there's something not quite right here. So if you stick around, pretty positive that you're gonna learn something from this video, but let's dive into it. So first and foremost, what's this idea of market volume, or volume in the market? What's the idea around it? Well, it's very simple. It's demand and supply. So as an example, if I see very high volume, it tells me that there's a lot of trading going on. It doesn't tell me if they're buyers or sellers. Now, you know, I'll come to that, but it tells me there's a lot of trading going on. And if there's a lot of trading going on, then there's a lot of competition for asset. And if there's a lot of competition for asset, then the move is going to mirror that. And that's the primary guide, is why we want to focus on volume, right? Because when we think of volume, we think of it as an aggregate. So all of it put together, all the trading that happens within a specific period or session gives you a really good idea of what's happening, right? So if we're going to take a very brief example, I've just picked a random spot on the chart, by the way. So this is the New York Open. We had very high volume, a bit of tailing, big up move, right? This was on the New York Open, probably associated with some news event, could be something like that. The truth of the matter is that we get this explosion of volume because a lot of people were competing for the prices, most likely at the high. And we want to take note of that. And that's why we zoned off the area, because then we can see that the price subsequently fell. And then in the Chicago Open, right, which is part of my time trifecta, all these things I mentioned in New York, Chicago, these are major center opens, which falls into my time trifecta. Right? My trifecta method is how I trade, right? It's how I put together everything that I do. Everything that I use is to aid that, right? So I'm looking for liquidity, I'm looking for volume, and I'm looking at time. That's it, nothing else to it. And I can assure you guys, if you do anything different from what I'm telling you, you're gonna keep losing money. It's really simple.
I'm not afraid to hurt your feelings. They have like a 2-second rebound rate and you're back doing the next pain in the ass thing.
For me, it doesn't really matter what I do, and it works. It's been proven over a 15-year span, 15-year plus now actually. So I'm highly confident in what I'm telling you. So it's really down to you what you get from all of it. I hope that it changes your life, as I get, so like I said, you know, for guys who send me the messages, amazing. I really appreciate it. At the end of the day, I'm glad you found me. But guys, if you don't listen to me, it's going to go sideways, right? So it's up to you. You've got nothing to lose. In any case, we can see in the Chicago Open, we have a big build-up of volume here, bit of tailing, and then we want to take note of that. Now, I tend to mark these out in a specific way, and I have other videos which cover that, but then I want to take note of that. So now, like I was saying to you earlier, we don't know if they're buyers or sellers. What we do know is that the price traded lower. We got some tail action. We saw that there was a bit of sell pressure coming from the upside. So clearly there's some supply here and there's also some demand here. So by marking both, I can create a bracket, right? And the thing that's most important is that I can create a bracket. And if I can create a bracket between buyers and sellers, I kind of know where there's sort of dynamic support and resistance. So I know when the price goes up there and it hits a wall of sellers or what was a previous area of selling, then it should, by theory, come down, because that becomes a really good reference point, right? And you can see the example of that here as we traded into the New York Open of the next day. We can see despite having a very strong close to the upside, the market just headed lower. Now for a regular trader who might be trading with some, I don't know, some indicator or something, right? Something that they have been told works. They might be putting long orders here thinking that we're going to get a big breakout, for example, right? Or they might have been buying here just a little bit late in the day, for example, right? And that's because they're not aware of the demand and supply picture. Something that is very easy to map out, and as long as you're willing to put the work and the time like I've done to map it out, then there is absolutely no reason why you can't succeed. Simple as that, right? So even as we progress into today, you can see that we had some demand in the London Open. We had slightly higher volume from 7 a.m. You can see 8 a.m. the London Open. Again, it's major center open. We had some demand. Sorry, that's me hitting my boom stick. In any case, we had some demand, and then we had some liquidity grabbing, and then we go higher. Right now we're seeing some demand coming in the New York Open, and we're still putting higher prices. So there's a very good chance that we're going to continue working our way up until we hit another area of reasonable supply. So when we put all of this into context. We understand that it's the demand and supply picture that is moving the market. So it is pretty much where the money is going is where the market is going. That's what we talk about when we talk about market volume. So if you want to check out some of my other videos, that would be awesome. And I will put a link to some of the other videos I've done on volume in the description as well, so be sure to check those out. And I hope you're starting to see why people come to this channel. It's because there's no BS here. It's literally, I'm just showing you what I tend to do, and if you look at across all my videos, you get to see that, and it helps you understand what you would like to do with your trading, and hopefully it makes a difference to your life. To my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your clients money at the same time it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your clients money at the same time it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?